Hey everyone, ready to dig into some gold?
Always up for that.
Well, today we're diving deep into Nemont Corporation. They just dropped their 2024 financials and their guidance for 2025.
I was just reading those. Some interesting stuff in there.
Yeah, what caught my eye was all this streamlining they're doing, selling off assets really laser focused on what they call these tier one gold mines.
Tier one! I always chuckle at those corporate buzzwords, but hey, it seems to be working for them.
It does make you wonder though, right? What's the strategy here? And what does it all mean for the future of gold?
Especially with those record cash flow numbers. And their CEO, pretty bullish on gold prices staying strong too.
Yeah, there's a lot to unpack here for sure, but luckily we have our expert here to help us make sense of it all.
Happy to break it down. So 2024 for Newmont, big year of change, big year. They scoop up all those new mines from that Newcrest mining acquisition.
Right, I remember that deal.
Yeah, and then they turn around and sell off 6 mines they label non-core, plus a chunk of another project. Pretty bold move.
Oh. So kind of like cleaning house after a big move.
Yeah.
But why ditch perfectly good gold mines? What's the logic there?
That's the million-dollar question, isn't it? It's about focus, strategic focus. The mines they let go of, Akium, Cripple Creek and Victor, Eleanor, Musselwhite, Porcupine, and Telfer, plus their piece of the Havieron project weren't bad, just didn't fit into this new vision they have. They're all about these tier one assets now, the best of the best.
Okay, so ditch the good to go all in on the great. Got it. But what's that look like in terms of actual, well, dollars and cents? What do they get for all those mines?
They're estimating up to $4.3 billion from those sales.
Wow.
Yeah, not bad, huh? And here's where it gets really interesting. $2.5 billion of that cash expected in the first half of 2025.
That's a serious chunk of change. But let's back up for a sec. Before we dive into what they're doing with all that cash, let's look at what they earned in 2024. Those numbers were pretty impressive from what I saw.
Oh, they were record-breaking. Record operating cash flow at $6.3 billion and free cash flow, get this, $2.9 billion.
And that fourth quarter, right, that was just mind-blowing. $1.6 billion in free cash flow in just 3 months.
Yeah, pretty incredible. Even for a company like Newmont, that's a huge number.
So what drove those numbers? Was it all from the mine sales?
The mine sales definitely helped, no question about that. But the rising gold price played a big role too. They got an average of $2,643 per ounce for their gold in that fourth quarter. That's a $125 jump from the previous quarter.
Wow.
Yeah. So you take that higher gold price and you run it through their most efficient mines. Well, the profits start rolling in.
Makes sense. And this, for those listening at home, this is why a company's financial health matters. Strong cash flow, like what Newmont's got, usually means stability, growth potential, and maybe even some nice dividends for those investors out there.
We'll get to those dividends a little later. Don't worry.
But for now, let's look ahead.
Yeah.
What's on the horizon for Newmont in 2025? What are their predictions, their goals? What are they looking at?
Well, even after selling off those mines, they're still expecting to produce around 5.9 million ounces of gold.
Hold on. They sell mines, but still produce about the same amount of gold? Those Tier 1 mines must be something else.
They are pretty impressive.
But I'm guessing keeping that production level up comes with some costs, right?
Oh, yeah. Costs are projected to go up a bit. Part of that is just inflation. You know how it is. But they're also putting some serious money into this tailings work.
Tailings! Okay, now for those of us who aren't mining engineers, what exactly are tailings? And why is it such a big deal?
Tailings are basically the leftovers from mining. So you dig up all this rock to get to the gold, right? Well, the stuff that's left over, the rock and other materials, that's the tailings.
Ah, okay, so like the mining waste?
Yeah, you could say that.
Yeah.
But managing those tailings responsibly, that's crucial, both for the environment and for long-term sustainability. And Newmont's actually doing something called concurrent reclamation.
Concurrent reclamation. Sounds fancy. What's that all about?
It's basically cleaning up as you go. So instead of waiting till the end of a mine's life to deal with those tailings piles, they're actively reclaiming the land while they're still mining.
Oh, that makes sense.
Yeah, it's much better for the environment, and it can actually save them money in the long run. And that's one of the things that really makes Newmont stand out. A lot of companies, they see reclamation as just a cost, something they have to deal with eventually. Newmont, they're baking it into their operations from the get-go.
That's a smart move.
Yeah.
So they're spending more on responsible mining. They're getting more efficient with their top mines. What else is on their radar for 2025?
Well, they're predicting a slight dip in sales volume. That's because of something called mine sequencing.
Mine sequencing. Okay, that one's over my head.
It's all about the order in which they mine different parts of a deposit. Sometimes, to get to the really high-grade gold, they're going to mine some lower-grade sections first,
Oh,
like strategically planning your harvest right, maximize your yield over time.
interesting. So it's a short-term dip to set them up for stronger production later on.
Exactly. It's all part of the long game.
Speaking of the long game, they're not just focusing on their existing mines, right? What about new projects?
Oh, they're investing heavily in some key projects. Tanami Expansion 2 in Australia, Ahafo North in Ghana, and those Cadia Panel Caves also in Australia.
I was reading about those.
Yeah, they're pretty incredible. The Tanami expansion will extend that mine's life for decades. Ahafo North, brand new development that's going to be incredibly cost effective. And the Cadia Panel Caves, that's some high-tech mining. Allows them to tap into deep, high-grade gold deposits.
Wow, so they're really pushing the boundaries. But all this growth, it's going to take some serious cash, right?
Absolutely. And that's where that $525 million comes in, the money they've set aside for exploration and advanced projects.
$500 million just for exploration.
This is where Nemont's strategy gets really interesting. They're not just squeezing every last drop out of their current mines, they're actively hunting for the next big gold discovery. It's a riskier approach, but the potential rewards.
Yeah.
Huge.
Talk about playing the long game. So they're securing their future in a big way. But let's not forget about the folks who are already on board with Nemont. What about the shareholders? What's in it for them?
Good question. Nemont's committed to returning value to those shareholders in a couple of ways. One is through share buybacks. That often boosts the stock price, which is good news for anyone holding Nemont shares. They've already repurchased $1.2 billion worth so far.
Okay, good for the shareholders. What about dividends?
Oh, they just announced a 0.25 cents per share dividend for the fourth quarter, brings their total dividend payout for 2024 to $1.1 billion.
Wow.
It's a pretty sweet return, and it really highlights how strong their cash flow is.
So they're making money, investing in growth, A&D rewarding their shareholders. Sounds like they've got it all figured out. But here's the question that's probably on everyone's mind. Can they keep up this performance, this momentum, while also sticking to their sustainability goals? That's a tough balancing act, especially in an industry like mining. You know, it doesn't always have the best reputation when it comes to environmental stuff.
It's the million-dollar question, right? We've seen how they're streamlining their portfolio, focusing on those high-quality assets, investing in projects that are going to drive long-term growth. But are those efforts enough? Enough to really balance profit and sustainability in the long run?
That's what we'll be digging into next. So we've seen how Nemont is trying to balance profits with sustainability. They're investing in things like concurrent reclamation and water treatment plants. But they also mentioned something called a global closure strategy.
Right.
That sounds pretty intense. What's that all about?
It's their plan for how they manage mine closures responsibly. It's not just about cleaning up the site.
Right.
It's about creating a positive legacy, one that benefits both the environment and the communities nearby.
So it's more than just minimizing the bad. They're actually trying to create something good.
Exactly.
Interesting. So what might that look like? Give us some examples.
Well, imagine a mine that's no longer operational. But instead of just abandoning it, they transform it into something like a nature reserve or a park. You know, something for the community.
I see.
Or maybe they reclaim the land for agriculture. That could give local people some new opportunities.
That's a much different picture than what I usually think of when I hear the words abandoned mine. They're really trying to avoid those environmental headaches down the line.
Yeah, that's a big part of it.
Okay, but let's shift gears for a second. Let's talk about the global gold market. The price of gold can be pretty volatile, right?
Yeah.
So what's Nemont's take on where the price of gold is headed? How does that factor into their strategy?
Well, their CEO, Tom Palmer, he's actually pretty optimistic about the price of gold staying strong.
Okay.
He points to things like global economic uncertainty and geopolitical tensions. You know, that kind of stuff tends to make people want to hold on to assets that are seen as safe and stable.
Right. Gold has always been that safe haven asset. So when the world feels shaky, gold looks a little shinier. But how does a strong gold price actually affect Nemont's decisions? What do they do differently?
Well, higher gold prices mean more profit for gold miners like
Yeah,
Newmont, right?
of course. Yeah.
And that extra profit gives them more flexibility, more money to invest in new projects, grow their existing operations, and of course to return value to those shareholders we were talking about.
Right. So a rising tide lifts all ships. But what about when the tide goes out? What happens if the price of gold takes a nosedive? How does Newmont protect itself from that kind of volatility?
That's where their focus on those tier one assets really comes in. Those mines are the cream of the crop. High gold grades, low operating costs. So even if the price of gold drops, they're more likely to stay profitable.
Makes sense. So it's about building a portfolio that can weather the storms.
Exactly.
Okay, but I'm still curious about what actually makes a mine a tier one mine. What are the specific things they look for when they give a mine that label?
To be considered tier one, a mine has to meet some pretty tough standards. For starters, it needs a large reserve base, meaning there's a lot of gold there that can be extracted economically.
So size matters.
It does, but it's not just about quantity, right?
Right.
The grade of the gold is super important too. Tier 1 mines have higher gold grades, more gold per ton of ore,
Oh, I see.
and that means higher profits.
So big reserves, A&D, high quality gold. What else are they looking at?
Well, low operating costs are a must. Tier 1 mines are designed and managed for maximum efficiency. Keeping those costs down is crucial.
Yeah, they're not just digging up gold, they're doing it in a way that actually makes financial sense.
Yep.
But I bet it's not just about the numbers, right? Things like the mine's location and the political stability of the region probably play a role too, don't they?
Oh, absolutely. Newmont takes those geopolitical risks very seriously when they're evaluating a mine's potential. They want to operate in stable regions, places with supportive governments and clear, consistent regulations. They don't want any surprises.
Smart move. Nobody wants surprises in the mining industry. But even with the best plans in place, there are always risks. What are some of the biggest challenges that Newmont's facing right now? What could trip them up?
The mining industry is inherently risky.
It is.
One of the things they're grappling with right now is this trend of resource nationalism.
Resource nationalism.
Yeah, more and more governments are trying to exert more control over the natural resources within their borders.
Interesting. So that could mean what? More regulations? Higher taxes?
All of that. It could even mean governments trying to take over mines completely.
Wow, that would be a major headache for a global company like Newmont.
It definitely could be.
And it's not just resource nationalism, right? There are other challenges too.
Oh, for sure. Commodity prices are notoriously volatile, and gold's no exception. We talked about how a high gold price can be good for Newmont, but if the price suddenly drops, that could really hurt their profits.
So they're kind of walking a tightrope.
You could say that.
Okay, so what other challenges are they facing?
Well, permitting and regulatory approvals are a constant battle for mining companies. Getting all the necessary permissions to operate can take a long time. It's complicated. And any delays can really throw things off, drive up costs.
So bureaucratic red tape can be a real pain.
It can.
And then, of course, there's the environmental piece. We know mining doesn't always have the best reputation. What's Newmont doing to address those concerns and show that they're serious about operating sustainably?
Right. Well, we've already touched on some of their efforts, things like concurrent reclamation, water treatment plants, their global closure strategy.
Right, but are those just words? Are there actual examples of how those sustainability efforts are making a difference in the real world?
Absolutely. Take their Yanacocha mine in Peru. They're building 2 brand new water treatment plants there. That's huge.
Yeah.
It's a big step forward in terms of managing water responsibly and protecting the environment.
So they're putting their money where their mouth is.
They are.
But sustainability isn't just about protecting the environment, right? It's about social responsibility too.
Exactly right.
So how is Newmont handling that aspect of things?
They're committed to working with local communities, creating jobs, supporting economic development.
Okay, so they're trying to be good neighbors,
Yeah.
not just extracting resources.
Yeah.
But let's face it, they're not the only player in this game.
Yeah.
Who are Newmont's biggest rivals? And how do they stack up against the competition?
They've got some tough competition. Companies like Barrick Gold, AngloGold Ashanti, Kinross Gold, all major players, each with their own strengths and weaknesses.
So what sets Newmont apart? What are their secret weapons?
Their portfolio of Tier 1 assets is definitely one of their biggest strengths. Those world-class mines, that's their foundation.
Makes sense.
And then there's that commitment to exploration, that $525 million they're spending to find the next big gold discovery. That's a major differentiator.
They're not sitting around, they're out there hunting for gold.
Exactly.
But even the best companies have weaknesses. What are some things that could trip Newmont up? What should investors be aware of?
Well, operational risks are always a concern in this industry. Things like equipment breakdowns, labor strikes, natural disasters. You can't always predict those things, but they can have a big impact.
Unforeseen circumstances, they can disrupt things.
Yeah. And integrating those acquired assets, like the mines they got from Newcrest, that
Yeah.
can be tricky. Blending different company cultures, different management styles, it's not always easy.
Right, so more than just adding mines to their collection, it's about making it all work together.
Exactly.
Any other potential weaknesses we should be thinking about?
Well, as they dig deeper, go after more complex deposits, the technical challenges increase, and so do the costs.
It's a high-stakes game. Okay, so we've talked about Newmont's financial strength, their commitment to sustainability, their rivals, the risks they're facing. It's a lot to take in.
It is. It's complicated.
So here's a question for everyone listening. Knowing everything we've discussed so far, would you invest in Newmont Corporation?
Tough question. It really depends, right?
It does.
Your personal investment goals, your risk tolerance, how well you understand the gold market. We've tried to give you the information you need to make an informed decision, but ultimately, the choice is yours.
We've laid out the facts, but only you can decide if Newmont is the right fit for your portfolio. All right, welcome back for the final part of our deep dive into Newmont Corporation. We've covered a lot of ground, their financials, their sustainability efforts, even sized up the competition.
We have.
But before you make that decision, invest or not invest,
Yeah.
we got to zoom in on two crucial things: their track record and the team running the show.
It's like checking a company's references, right?
Yeah, exactly. Past performance can give you a pretty good idea about their potential in having the right leadership that can make or break any company.
Especially in an industry as complex as mining.
Totally. So let's rewind the clock for a sec. Newmont's been around for over a century, right? They must have some stories to tell.
Oh, they do. Their history goes all the way back to 1921. They started small, but grew steadily over the decades, acquiring and developing some of the most productive gold mines in the world.
I bet they've seen it all right. Market booms and busts, global crises. Mining's not for the faint of heart,
It's not.
but they're still here and thriving by the looks of it.
Their longevity says a lot about their ability to adapt, to innovate, to make those smart decisions that have set them up for success over the long term.
Right, so resilience is a big plus.
It is.
But let's fast forward a bit. How's their recent performance been? Have they been living up to their reputation?
Well, remember those record-breaking financial results we talked about?
I do.
Those aren't just a fluke. Newmont has consistently delivered strong financial performance for years. And a lot of that comes down to their focus on those Tier 1 assets and their tight control over costs.
Yeah, that kind of consistency, it's a good sign, right?
Yeah,
It tells you something about how well the company's managed.
it does.
Okay, but let's put some faces to the names. Who's calling the shots at Newmont?
The captain of the ship's Tom Palmer, their president and CEO. He's a veteran mining executive, deep understanding of the industry, and a clear vision for Newmont's future. He's been the driving force behind their shift towards those Tier 1 assets and the sustainable mining practices.
So he's got the experience and the vision, good combo. But he can't do it all alone, right? Who else is on the leadership team?
Newmont's built a really strong executive team, seasoned professionals in every area: operations, finance, sustainability, exploration, you name it.
Gotcha.
They've got a really diverse set of skills and experience, which is crucial for a global company like Newmont.
They've got all the bases covered.
They do.
Okay, so they've got experience, a strong leadership team and a proven track record. But what about the future? What's next for Newmont? What are their big goals?
Well, their strategic plan boils down to a few key things.
Yeah.
First, they're all about maximizing the value of their existing Tier 1 assets, getting the most out of those world-class mines.
Mm-hmm.
That means maximizing production, keeping costs under control, and finding ways to extend the life of those mines through exploration and innovation.
So making the most of what they have while also looking for ways to grow.
Exactly.
What else is on their agenda?
Growth is definitely a priority. They're looking for opportunities to increase gold production, both by developing new mines and by making strategic acquisitions.
Acquisitions, right?
But they're not just buying up every mine out there. They're being very selective, only going after targets that meet those Tier 1 criteria.
Smart.
Yeah, they're not just chasing shiny objects.
But it's not just about getting bigger, is it? There's more to it than that.
You're right, sustainability is a core focus for them. They're serious about minimizing their environmental impact, building strong relationships with those communities around their mines, and really setting a high standard for responsible mining.
It's that balancing act we talked about before, profit and responsibility. It's not easy to do both well, especially in an industry that gets criticized for its environmental and social impact. But let's be realistic here. What are some of the potential roadblocks, the challenges that could derail Newmont's plans?
Well, like we mentioned before, resource nationalism is a big risk for any global mining company. Governments are becoming more assertive about those resources within their borders,
Hmm.
and that could lead to tougher regulations, higher taxes, or even the risk of having assets seized.
Wow.
Yeah, it's a real concern.
Anything else keeping them up at night?
The global economy is another big one. Things are still pretty uncertain, and that can impact demand for gold. Inflation, rising interest rates, geopolitical tensions, all of those things can affect their revenue and their profitability.
Yeah. The world is a complex place right now, and that complexity has ripple effects even on the biggest companies.
For sure. And then there's always the wild card of commodity prices. Gold is no different. Even with those top-notch mines, Newmont's still vulnerable to price swings. Those ups and downs can really dent their profits.
It's a volatile market.
It is.
Okay, so it's not all smooth sailing, even for a gold giant. But let's end on a positive note. What are some of the key factors that could drive Newmont's success in the coming years? What makes them a company worth watching and maybe even investing in?
Well, their portfolio of Tier 1 assets, that's a major advantage. It's like a gold mine of gold mines.
Right.
That gives them a solid foundation for growth and profitability for years to come. Plus, they're not afraid to innovate, to explore new technologies, new ways of doing things. That keeps them ahead of the curve when it comes to finding and developing those new gold deposits.
And it's not just about profits either. Their commitment to sustainability, that's a big differentiator. It appeals to investors who care about more than just the bottom line.
Absolutely. They've got strong leadership, a disciplined approach to cost management, and a clear vision for the future. All of that makes them a real leader in the global gold mining industry.
Well, there you have it. We've explored Newmont from every angle, their strengths, weaknesses, the opportunities they have, and the challenges they face.
We covered a lot of ground.
Looked at their financials, their sustainability efforts, their competition, their plans for the future.
It's been a deep dive.
It has. Now it's up to you to decide, is Newmont Corporation the right investment for you? The world of gold mining is constantly evolving, so stay informed, stay curious, and keep on digging deeper.